Hello. Today as Team Fund, Team 1, we are presenting the fund fact sheets. And our team members are Eduardo, Mariana, George Dan, Cherry Yu, and Farida. Please, Mariana, to the next slide. As you see in the agenda, we start with introduction. We follow on with index fund fact sheet and followed by the commodities fact fund. And the last one is crypto alternative investments. And in the end, we will talk about the advantages and recommendations each time. When we talk about the alternative investments are investments made outside of the traditional asset classes, which are stocks, bonds, and cash investments. These type of investments are supplemental strategies to traditional long-only positions. And alternative investments include the investments in 5 main categories, which are hedge funds, private capital, natural resources, real estate, and infrastructure. Today, we will talk about the equity stock index fund, and the second will be commodities fund, and the last one will be cryptocurrencies. To the next slide, please. Please continue, Dan.
Hello, everyone. My name is Dan. I will talk about Solactive GBS United States 500 benchmark. Its rating is medium to high, and the horizon time is set to long. The fund has started in inception in 1997, and it has a total assets value of 1.08 billion US dollars, with a net asset value of $45.63. The fund objective is long-term capital growth, who tracks the performance of the main US equity indexes. A great reason for investing is that offers fully exposure to the US market and enables investor to gain exposure in this market. Can you go next? Its top 5 allocation is related to the information technology, health care of the main ones, and the industry, with a good return over a span of last 10 years. If you go next. Out of the top 10 holdings, we can relate regarding the technology giants, Apple, Microsoft, Amazon, and with the geographical allocations into the United States and the main locations in Ireland, United Kingdom, and Canada. That is all from my end.
Thank you, Dan. My name is Mariana, and I will be talking about a commodities fund called Fidelity Select Gold. In this slide, we have selected Fidelity Gold because it has been established in 1985, so it has been in business for almost 40 years. It has no minimum investment amount, which makes it accessible to investors who are just looking to start to invest. The objective of this fund is to generate returns quickly through security select in gold asset class. It's heavily invested in mining companies, in exploration, processing, or simply dealing in gold. These companies principally engage in gold-related activities and in physical gold bullions or coins. As we can see, about 90% of the fund is invested in gold and in silver, which comes in second place, close to about 5%. The fund holdings are mainly international, with almost 80% of the equity internationally, and compared to less than 20% of domestic equity. Now, handing it over to Cherry Yu.
Thank you, Mariana, for introducing the different holdings within Fidelity Select Gold portfolio, the investment approach, and overall objective. So my name is Sherry, and moving on, I will be covering the risk and returns of Fidelity Select Gold. Risk refers to the degree of uncertainty or potential financial loss that is inherent in an investment decision. Fidelity Select Gold has a high risk rating, which makes sense because the gold industry is sensitive to international monetary and political developments, such as currency devaluations, central bank movements, and really any major changes in economic or social conditions. There is higher risk also due to the narrow concentration of Fidelity Select Gold in a specific industry and a lack of diversification. We can also look at the risk level and learn more about it by looking at the risk and volatility measures of Fidelity Select Gold. For instance, the beta of an investment security is a measurement of its volatility of returns relative to the entire market. So a company with a higher beta has greater risk and also greater expected returns. Fidelity Select Gold has a beta value of 1.05, which means it is more volatile than movements of the overall market, and it tends to show varying returns that are slightly greater than the average market. In addition to risk and volatility measures, there are also fees and expenses that should be considered by investors interested in Fidelity Gold. For example, the annual report expense ratio is 0.76, and this means that for every $1,000 of expense, there's about a $7.60 fee. There are also different transaction fees that should be considered. For example, there's an online transaction fee of $49.95 per transaction made. So having covered some of the risk of Fidelity Select Gold, let's continue on with a discussion on the returns. So the post-liquidation method shows the after-tax returns net of both distributions and capital gain taxes that are due upon liquidation. It reflects the total return after all taxes over the life of an investment. So this includes the capital gain or loss that is realized when investors actually sell their shares. And as you can see from the quarterly tax analysis on the slide, Fidelity Select Gold has a post-liquidation 3-month return value of 11.76%. And although across the 10-year period, we do see fluctuations in the performance, since its inception, Fidelity Select Gold has still shown a promising 3.9% net return since it was founded in 1985. So some of the key factors that are driving long-term demand for gold is its ability to hold and store value and act as a defensive asset, especially among central banks and institutions. So between March 2022 and February 2023 alone, the US Federal Reserve has increased interest rates about 8 times to bring down inflation, and experts predict that interest rates will continue to hike all the way until 2024. So while the rising interest rates could be a bullish factor for gold due to the common belief that gold will appreciate and offset inflationary pressures, it is important to be cognizant that gold ultimately runs from a function of the supply and demand. Changes in price movements in mining stocks and gold bullion are intricately linked between the physical gold and gold mining stocks, and this relationship is strong and persistent across economic cycles. So increases in supply could cause the price of gold to plummet and vice versa. So with that, I'm going to pass the time back to Farida to wrap us up on the advantages. Oh, sorry, to Eduardo to talk about the crypto fund.
Hello, I'm Eduardo. I'm going to talk about the crypto fun fact. So the investment opportunity with crypto, it should be usually long term, so more than 6 to 10 years. If it's more than 10 years, is better. And the reason for investing in crypto is the diversification. If you invest in a small amount of your portfolio in a crypto fund fact, you are diversifying and also the potential high risk returns. The crypto market is known for its volatility. This means that it's a high risk market, but it also means that the returns are pretty high. If you check the graph on the right hand side, you can see the composition. We have some of the most known cryptocurrencies that this fund is investing in, like Bitcoin, Ethereum, Binance Coin, Cardano. Next slide, please. Okay, so if you check the market cap, you can see there is no mega cap like in stocks. We just have large and medium, some small investments over there in the cap. For the 5 top sector allocation, we have Bitcoin, Ethereum, Binance Coin, Cardano, and XRP. And in the geographical allocation, you can see that it's global. Since cryptocurrency is mostly online, you don't have like an actual country or like an actual region that you gotta invest. And in the portfolio holdings, we just have cryptocurrency, no bonds, no other holdings. That's why it is an alternative investment. Next slide, please.
Thank you, Eduardo. When we talk about advantages and recommendations, I would like to mention that gold is frequently a sought-after asset class and can rival certain stocks It's an excellent diversified because of its low correlation with other asset classes, particularly stocks. In the event of a financial downturn, gold can actually serve as a rescue asset. A good way to invest passively at low cost is index funds, which can track a benchmark index as closely as possible with its risk and return characteristics. With passive index funds or ETFs, private investors can invest in a low cost manner while saving on fees. Although cryptocurrencies could be seen as a high risk investment because it's an alternative investment type, like other such investments, they also offer a higher return. They make a great option for a long-term investment due to the fact that they are likely to remain strong and pull through any financial crisis. The next one, please. It's also easier to both invest in and retrieve the funds than with other alternative investment types. Overall, cryptocurrencies should be carefully invested in, but can provide the best of both worlds in terms of traditional and alternative investment. Crypto has made investing accessible to a broader range of people and has the potential to bridge the gap between alternative and traditional investments. Thank you.